Morning traders, Paul here with Gamma Edge. Today is Wednesday, the 14th of September. Let's get started. Please pause your players here, read to the bottom. If you agree, hit that play button. The overall summary for today is that we feel obviously with the CPI and with yesterday's sell-off, we've got a lot of opportunity here for more downside, but we do think to watch for a dead cat bounce. All the signals have turned off. We think that's important. Of course, this is paper trading. Want to highlight yesterday, we did say don't ignore the signals, and we're going to cover this in a little more detail today. It's important not to ignore the signals, and hope is not a strategy. Hoping that things turn around is not necessarily going to work. CPI analysis, we think the SPX structure and the liquidity around 4,000 most likely played a contributing role to the push lower, and we're going to cover that today. The 0DTE has a clear transition. It's pretty well defined, but it's weak above that level all the way up through 4,000, and above 4,000 it vaporizes pretty much. Deltas and gammas are largely negative on our side of the table, the retail side of the table. So we are in a put-dominated environment by our math. We think there is a huge amount of expiration. It's grown quite a bit. So these are short-term puts that were added yesterday. It's now north of 30%. And so it'll be interesting to see where that money goes, how it's redistributed. And you can use the $OI command, and of course with the new slant commands, go ahead and monitor that. Transition in the primary complex is from about 40.10 to 40.45. It's pretty weak. We expect a lot of rudderless behavior in that area. We think the first upside line is right around 40.50. We don't see that in the stars, but of course anything's possible. It's definitely within the expected range. 3,900 has resumed the downside minus GEX target. If breached, this could be really problematic in the big picture because the gamma adjustment through the level is quite large. We also see the same thing at 3,800, and 38 is very, very close in magnitude, even from where we are right here at up in the 39s. So just be aware of that. Everything is well within the expected move today. We blew through the expected move yesterday, so something to pay attention to. Want to go through this. We had a number of questions come in, and I want to make sure people are looking at this from at least a foundational component. So yes, said we had several days of end of day valuation where the cumulative tick was pushing higher. We had railroad tracks up, and you can see that day over day we were doing very, very well. This gives us an end of day risk on, and that extended literally all the way into the close of the 12th, okay, the Monday night session. Starting here with yesterday's action, we gapped down from where we closed up here down to around 40.37 area, right in that zone, and that immediately triggers, if you entered a new position in these areas, you're going to be underwater here. And as I said, hope is not a strategy. And so you got in late. It's that simple. Your timing was not very good if you got in these areas. And so this would be the time to close. You don't know what's going to happen. The failure to reclaim the high tells you that things are not looking good. So by about 10 o'clock, certainly things would have been indicating that you've got a problem. A little bit later, about 10:30, we broke this 4,000 strike level. That was our line in the sand yesterday. When we broke that, that is a clear indication that something's not right. And so if you didn't get out up in here, this was clearly an area to pay attention to. Now, coincident on that was that we actually had the CT heading down and starting to slice through its shortest term moving averages. If you ignored this signal certainly would have told you some risk off. And JB, actually, one of our traders, actually posted something that saying this was his risk off signal at that time. When the cumulative tick cut through the slowest short-term moving average, that's another signal saying, protect your gains. Of course, the SPX was down here. This time frame, you've already lost. So if you didn't get out and we're hoping this is kind of your last last chance. Now we did stabilize in this area. You can see that we were in this area right around that 39.80, 39.75 zone, and we were bouncing around, and so this gave us a run up. I know a few people were probably holding into this area. That's where hope is availing itself, but clearly there was a challenge there. And the failure to penetrate that level, which we knew was a line in the sand, was a clear indication that something wasn't right. Same thing here, and the failure to come up here basically said that if you were holding long positions, time to close those things. Here at Circle 6, very interesting, we took out the low of the day, and we were actually on voice at that time, and we called this out for everyone who was listening. And we were discussing that when you breach the low of the day, especially in the afternoon session, that's going to be some weakness, and you can see the adjustments that took place into the end of day. Kind of at that same time, we entered the top of the longer term moving average, and this turned off the intermediate term timer here. And really set the tone. So the short term was off, the intermediate term was off, and this was already in a bearish state, the long term. So by now, the nail is really sealing the coffin shut at this time, and you can see that what we did into the 3:30 time frame and then into the close here. So I think the thing to take away here is that, there are a lot of us who did very well on this rise up. Risk management is a key here, understanding these different signals. If you have any questions about this, come into the Discord and ask. We use this as a good timing model. It helps you catch these trends. I know a lot of folks, like to take counter trend trades, and if you can do it repeatedly, go for it. This helps you. If you're managing risk, you're going to be wrong, obviously, if you got in these areas and it reverses here, you're obviously going to be a little wrong at that time, but nevertheless, there's going to be some good risk management as you get out of these positions, because effectively the market has changed against you. Be adaptive, be fluid. Transitioning now, I want to do a little bit of a review on post-CPI numbers and what happened yesterday. So we think part of the reflexiveness of the CPI response yesterday was due to the underlying market structure. The dealers had no choice but to respond. You'll see that here in a moment, one of our theses that we're thinking through. Three things are currently in play. So first of all, this week is a major options expiry for options and futures. There's a significant amount of capital being redistributed throughout the chains, and where it goes, higher or lower, is important. Looming on the horizon is this major shift in the SPX structure, created by the JPM hedging fund. The mothership is the one that expires this month, and the strikes associated with that hedging fund we think had a significant influence on where we are today, and you'll see that here shortly. And then within the complex overall, the 4,000 strike has had a high level of long-term puts, which we call put open interest. It's the largest strike that contains the puts and call open interest. And as it turns out, they've been coincident at 4,000 for some time, for months here. The options are relatively illiquid. They're associated with long-term capital hedging, and they're of course a Livermore number, and they're not nearly as in play as we see with the SPXP, the PM settled. So for those of you who are not familiar with the JPM hedging structure, it sets up a put collar, and then it uses a short call above to pay for that. And this is the one that's expiring at the end of the month. So they've got a collar down here between 35.80 and 30.20, and they use the 4,005 strike to pay for that, and basically it's a zero cost structure. A lot of contracts here. It's 20 billion in overall fund size. The delta notional on this is about 11 billion, somewhere in that zone. And the real key takeaway is that this is a very large transaction, and these things roll every month. At the end of every month, there's 3 of them that are in play. They roll every month, as you can see here. The biggest one is the one that's in play, and you can see we just crossed this 40 1.05 level. That structure looks like this. So for those of you who are not familiar with the P&L graph, I would urge you to become more familiar. When we take those three strikes, basically we've got a short put here at 30.20, we've got a long put at 35.80, and then we've got this short call at 4,005 multiplied by 46,700, and gives you a lot of value over here. And the idea behind this is a hedging structure. So in this range, JPM, if they're long the SPX, basically they have exposure in this range between these two, and once they get below the 35.80, then they start basically flattening their exposure, and so any further downside tail risk is hidden. They are exposed to the upside, so you can see where we've been. They've actually had some upside exposure here that I think is relatively important. Nevertheless, we finished right here yesterday. These are the P&Ls, and this is all shown from the perspective of everything that's going to roll here on 9/30. When we take a look at the deltas, basically each one of those strikes is either long or short, and as a result of that, we have a delta. Now, this is our side of the table. Flip this for the dealer. So the dealer will, instead of being -1 limit, which is what we are with put and collar, they are on the opposite side of that trade, so they are +1. So just multiply it now by 46,700. So the deal here is that into expiry, the blue line occurs. Before expiry, we go from gray to green to red, and that's showing up here, different dates. And so we closed right here last night. And this is the overall delta that we're looking at in the overall structure. So we started here on 9/12, we closed at 41.10 and change, so we had this delta that you were here, and then yesterday we were here. So we moved down this gray line yesterday. Now that's important. So what happens when that occurs, and what I've done here, you can see the shape is a little different. I've added in what we call a composite market structure. We follow all of the JPM, plus we have a large number of trades that we track with big baskets, 20,000 option contracts and larger, and we add those into the overall structure. This gives us basically the influence on delta, gamma, etc. through the market structure. We watch this and we track this. So one of the key things is we started here on 9/12, as I said, and then with that gap down, and then where we finished, this was the shortfall in deltas. And so if we're going towards zero here, that meant that the dealers who are on the opposite side of the table were now too long in deltas and they had to sell. And so they sell futures and sell the correlated underlines. Why that's a big deal here is that we feel that contributed to that downward pressure, right? So the CPI dropped us, the overall value dropped, and then as a result, the dealers had too much deltas, they had to unload, and in that unloading, they came down fairly quickly. Now this is that 4,005 short call strike. That's going to play a role here. So when we take a look at yesterday's PBI charts, this is the 4,005 strike that's sitting right here. This is the 4,000 strike that's sitting right here. These are the delta notionals, and these are the gamma levels. Here's your call open interest and put open interest that I was talking about before. This was the close of the 9/12, and then we opened here at 40.37 or so yesterday morning. And so this was the shortfall overnight. They were too long in deltas, and then they basically had to sell. And so if this is our starting point, they're starting to sell from this point. Now we thought yesterday that we'd get some contribution, not from the 4,005. That's not liquid because that's the JPM structure, but we thought we'd get some contribution from the 4,000, but it wasn't enough. And so we feel that as price fell down through this level, there just wasn't a battle here at the 4,005, 4,000 level, and we basically cut through it almost like hot butter, or a hot knife through butter. And so what happened here is that we started, really pushing south through the 39.95 and et cetera, dropping on down here in the overall zone. We feel that is a major reason why the 4,000 battleground did not hold. We expected, because of COI, POI, and that it was minus GEX, that it would put up a fairly significant battle, but as it turns out, the structure was intact, but just the ability, the liquidity, we feel, of these options just was not in play. And so as the dealers approached this from above, they had a challenge, and given that this was not a battleground, as we pushed through, they just had to keep selling in order to adjust the deltas that were being accelerated by the gamma levels that you see here. So we saw a major push here, which pushed us down, pretty dramatically. So our takeaways here is we think it's highly probable that 4,005, 4,000 level contributed to the decline. As they approach from above, they had that large delta in gamma levels. That was effectively keeping them too long. They had to sell. As they sold and approached this from above, and they got to this level, there was no contribution from the calls that were there, and as a result, we cut through it. As prices continue to fall, a combination of puts being opened, which also added fuel to the fire, and then being below that 4,005, 4,000 level really had an impact. And remember, on the delta curve here, we're moving downward in delta. So as price falls, they're getting effectively limit towards zero, or limit towards a lower number. They were on the long side of that, and so they're continually, as price falls, having to sell because of the puts being open and their delta adjustments. Okay, so switching gears here, I know a lot of you are looking for this. Here are the levels for today. We're back at 3,900 for the minus GEX. 4,300 remains up at plus GEX. We've got this 4,000 level, as we just discussed. We've had a complete sign change. Magnitude's relatively the same. 3.29 is the expected move. It's a little less than yesterday, but we may have some volatility. Want to just key your eye in here. That does put us down, all things being equal, down at the 3,800 level and up at about that 40.50, 40.60 level. So just keep that in mind. On the 0 DTE, as I said, we had a clean transition right here at 39.75, 39.80. Want to pay attention to that. Above that, gamma's turned positive on the 0 DTE, but you can see we still have a lot of negative delta all across the board here. So, but this well-defined area often becomes a parking spot, and so we want to pay attention to that as we go forward here. The other thing here, 38.85, just keep an eye on that. Below that, the 0 DTE does not have a great impact, but down into that, we could have some significance and some testing here. On the combo, which is the AM plus the PM, clear negative gamma region that we're in. It's all downside gamma or negative gamma is very, very prevalent. 43,000 to the negative, 40,000 down here at 3,800. So even though 3,900 is in play here, 38 is not far behind it. And if this yellow line, which is the closing price yesterday, drops down below this will grow in magnitude. Very, very important to understand. Also, as the yellow line drops, a lot of these small green numbers will turn red, and we will see a continuation downward in this particular case. We have a lot to absorb on the way down, but as we showed yesterday, nothing's off the table. One thing I want to draw your eye to is over here. Between now and Friday close of business, we're going to have at least 33-34% come off the table. That money has to go somewhere in the SPX, and with a $6 trillion instrument out there, we're talking about $2 trillion being redistributed just in the SPX alone, not including the SPY and the ES. So we got a lot of money changing hands. Be very, very aware of that. Above the 4,000, 4,005, you can see a weak transition zone, virtually nothing in there, and then above that 40.50, which is the first line, that could open the door to pushing us north, but we're not seeing it. It is all within range. I will say that this level of 40.50 is definitely within range, as you just saw, and the 3,800 is within range. If we take away this week's contributions, looking forward to see where negative GEX, what it does, and what positive GEX does. Positive GEX doesn't change. It's not shown, but it's up at 4,300. Negative GEX, though, drops to 3,800. So with all the transactions going on this week, even with gamma up, or with the spot price up here, we're going to lose quite a bit at 3,900. It's going to open up the door to 38. That's a trajectory. It's not a crystal ball, so it's just one of the if-then statements that we're looking at here. Taking a look at the overall structure, you can see visually why the 38, 39 are so close. They've grown dramatically since yesterday. Part of that is obviously the spot price coming down, but part of it, we had a lot of puts go into the overall structure overnight or yesterday's action. 4,300 remains, but you can see it's come down a dramatic amount. 4,100 is the next line above that 40.50. Transition's very, very small here, and downside here at 35.25 is a big deal. So I know today was long. If you made it this far, I appreciate it. If you like today's content or have any questions, come into gammaedge.us, click on the pricing tab of the webpage. Yes, we know it's blank. We're revamping it right now. Come on in, fill out the blanks, and great group of traders. All the tools will be turned on. You'll be able to look at this stuff yourself and play around. Really figure out how to integrate these tools into your overall trading style. Follow us on Twitter at Gamma Edges with an S, and then here on YouTube, of course. If you like today's content, which was kind of a special edition, very different than our normal approach, let me know. Hit that like button, and of course subscribe so that we can notify you the next time that myself, Taylor, or Michael post something up on YouTube. So with that, I will leave you to your own. Have a great hump day and hope to see you in the Discord. Thanks, everyone.